Good day, everyone. It's it's me here again. Um, it's been a while, you know, most especially after the Easter holidays, and price action tends to like become shabby. So I welcome you all to the second quarter of the trading year. Yeah, so I believe this quarter is kind of the most intense quarters, the most intense trading period of the year. So I welcome you all. I hope you all had a great Easter holidays too. So let's get back to price action as it is. You understand? So, anyways, without wasting any much of your time, uh, without wasting any much of your time, so let's get started. We are looking at Euro USD. First of all, I want to show you something. Whenever I'm doing an analysis, I always look out for two things, like two patterns. I call it pattern, but yeah, you get what I'm saying. So this is the first pattern. Let me make it bold so that you can see what I'm trying to do here. So this is the first pattern. This is your demand area, right? This is the first pattern. Then this is the second pattern. I call this more like a double bottom. You understand? Because sometimes price do sweep this low, or sometimes price do tap the low, or sometimes price do low. Just kind of tap the demand. The start of the demand area. So I call this pattern a double bottom. Is a bullish pattern, right? Whenever I want to take a bullish trade, I always look for this pattern. You understand? Yeah. So the second pattern is this. Okay, sorry. Yeah, so it's supposed to be like this. Yeah. Okay. Yeah. So this is like the second pattern. Okay. So this is a double top. This is a bearish pattern, right? So you can screenshot if you want. So anytime I want to place a trade, I always look out for these two things, right? These are my go-to confirmation. So I always when a pair is in an uptrend, I always like to go to the 4 hours and look for this, right? Look for this. Then whenever price is in a downtrend on the daily time frame, and I go to the 4 hours, I always look for this. You understand? So that's the first things first before we continue. So I want to do a weekly outlook on some major pairs that caught my attention, and we start from Euro USD. Okay, so on Euro USD, this is the price action on Euro USD as at 18th of April 2026. This is the price action, right? So the first things first is we are going to look for a trend. That is the first thing. Whenever you open your trading view, whenever you want to analyze a chart or price action, the first things first is you have to look for a trend. You understand? You have to know your bias, because it's your bias that takes you to the next step. If your bias is not clear, then you don't really have anything much to do on that chart. You just move on to the next pair. You understand? So let's look for our bias on Euro USD, and I use the daily time frame to get my bias. So we'll go to the daily time frame. Okay, so as you can see, the price is above the 150 EMA, as you can see. So to me, this is more like a bullish move. Euro is trying to make a bullish move. You understand? That is how I see it. And the second thing is you have to add a time range You understand? So right now it's on Friday 20th. So from 18th of April, if you calculate 3 weeks back, it will be Friday the 27th. So we have to move this line to Friday 27th. Yeah. So what this means is we are looking for price action only from this point to this point. That we don't want to trade any price action from year to year. That is the past, right? So we are trying to look for the most recent price action to trade from. You understand? That's the reason why I added a time range of 3 weeks. Okay, because 3 weeks is enough for price action on the daily time frame to start a trend, to make pullbacks and the rest of that. I hope you're following me. So yeah, so that's the second thing, which is our range. Friday 27th is our 3 weeks range. Then we go to the 4-hour time frames to look for our demand areas, because since we are bullish, we have to look for demand areas to buy from. You understand? And we do that on the 4-hour time frame. So we go to the 4-hour time frame, and yeah, so this is the 4-hour time frame. You can see how everything is coming up. Then we have to look for the nearest low to the nearest high. And where is the nearest low to the nearest high? If you answered correctly, it's this point. This is the nearest low to the nearest high. Are you following? So yeah, so we are going to take this point to this point for our bullish entry. Understand? I don't want to take from this point because it's very it's very far. Eye test is very far. So I want to take from this nearest point, this low here, to this high here for my bullish entry. Are you following? So yeah, so this low to this high. Then I'll put my invalidation line at this lowest low here. Invalidation level, yeah. This is my invalidation level, which means if price should break through and hit my stop loss, then I'm out of the trade, because that's invalidate my my entry, my trade. So this is the lowest low. Then this is the highest high. This is the highest high. Yeah. Right. So yeah. Lowest low, lowest nearest low, highest nearest high, and it's coming into play, right? So the fourth thing is, okay, we've gotten our trend, we've gotten our date range, we've gotten our lows and highs. So the next thing is on our list is entry. Where do you want to enter, right? You see, your trading plan is this. Everything has to come together. It's just like a spice, like adding spices to a food, right? The right spices will make the food delicious. So that's how it goes for trading too. So the next thing is, how do we get our entry? And if you've watched our previous video, right, I said, okay, our entry, the way I do enter, I use different Fibonacci methods, but the one I taught you guys that is easy to follow is 50 50 50 rule. Let me type it. Yeah, so 50 50 50 Fibonacci, right? 50 50 50 Fibonacci. That is how I place entries. You understand? That is how I taught you guys to place entries, so that you guys can be able to pick it up quickly. So we go here from the lowest low to the highest high, right? You put your 50% fee, as you can see. Then another 50 from the lowest high to this point. Then another 50 from the lowest low to this point. Now, as you can see, this will be our entry. Yeah. Right? Yeah. This is our entry. So we've gotten our entry. Now And as I said earlier, this is called a demand area. From your entry point to your invalidation line is called your demand area, right? This is where you expect price to take up buy orders. You see this line here? This is what you expect price to come in deep into, take buy orders and continue the upwards movement. So that is why I termed it demand area, right? So yeah. So we've gotten our entry, then stop loss and take profits. This is more like experience, you understand? I always put my stop loss below the low of the invalidation level. That is why I put my stop loss, you understand? So somewhere here is okay, you get? Somewhere here is okay. You don't have to, let me use 45 pips, you understand? Yeah, somewhere here is okay. Then 1:2, and yeah, you've gotten your trade. You've gotten your trade on Euro USD. So as you can see, everything is coming into play, from your trend to your levels, to entry, to stop loss and target. That is how I view the trade. So this is my trade on Euro USD going into next week. Now let's replicate what we've learned so far on another pair and see how we tend to create a trading plan. You understand? Are you following? So let's go to GBP USD, right? So the first things first is what? A trend. So we go to the daily time frame, and as you can see, price is above the 150 EMA, which signifies a bullish intent, right? So the second thing is we are going to adjust our date range to 3 weeks, which falls under Friday the 27th. After that, what's next? We go to the 4 hours time frame and we look for structural levels, right? We look for structural levels. So what is the next thing to do? The structural levels here is what? Getting a demand area and getting your entries, right? So where is the nearest lowest low? This point here is our nearest lowest low, and this point here is our nearest highest high. So as you can see, it's coming into play, right? See, trading doesn't have to be too complicated. You just have to do the simple things every single time, and and relax. You get? So we've gotten our points of interest, our structure. Will I call it that? Structure, yeah. So the next thing is we place our invalidation line at the lowest low here. So we place our line here at the highest high. Okay. So as you can see, it's coming into play. Then the next thing is our 50-50-50 fib rule. The reason why I use that is just to get the optimal entry point, because sometimes price don't get to your entry. So that is more like an optimal entry, a place where you know that yes, you are 70% sure that you will get filled, and at the same time your stop loss is still intact. So that's why I call it optimal entry point or optimal entry level. So we use the 50 fib rule here. Okay, from the lowest low to the lowest high. Then let's do it one more time. Then let's do it the last time. Okay. Yeah. So this is our line. Yeah. Okay. So yeah, this is the reason why I gave this 50-50-50 rules, because so that you guys can be able to understand the concept easier. Are you following me? So that is the reason why I chose it that way. So now we've gotten our entry line, our entry point. This is where we have to enter at 1.3409. This is the point where you can enter the trade, where you can enter a trade. So we just place our 2 here, our buy 2 here. right? Our stop loss will be below the low. Let's leave that 55 pips. Then our take profit is 1:2. And as I said, the area between the entry point to the invalidation line is called the demand area. You understand? So this will be our demand area. This is the place where I think that price will take order from. Yeah. So this is our demand area, as you can see. And we've gotten our trade idea on GBP USD. You know, it doesn't have to be very, very complicated. You understand? So let's go to another trade. Let's go to another trade idea. Let's check out on USD card, right? Let's check out on USD card. So USD card, what trend is this? For me, this is a downtrend because price is below the 150 EMA. So we are looking for a bearish move, right? So as you can see, we have to move our time range to Friday 27th. Very, very important, right? So the next thing, you have to go to the 4-hour time frame to look for supply areas. When it's bullish, it's demand areas. When it's bearish, it's supply areas, right? Where price can go and take sell orders and continue the bearish move. So go to the 4-hour time frame. Yeah. Now, where is the nearest high and the nearest low? So for me, this is the nearest high here, and this is the nearest low. And as you can see, price is like, okay, let's get here and let's continue the move. Something like that. It makes something like, okay, yeah. I believe you've seen something like this before. This kind of move. Yeah. So let's go. Yeah, we've gotten our points of interest. Then the next thing is to put our invalidation line. Okay. To the nearest high. And this will be to the low. Alright. Okay. So the same concept, the same principle applies. 50-50-50 rule, regardless. So I'm going to put our 50 feet here. Sorry. Put our 50 feet here. Put our 50 feet here. Okay, so yeah. So we've gotten our sell entry. You understand? We've gotten our sell entry at this point, and we just have to place our sell 2 here. Stop loss will be above the line. Let's put it to 40 pips. Yeah, and 1:2. And yeah, so that's the sell trade on USD card. The same principles, the same everything. So let me type it for you guys. So the first things first is get a trend on the daily time frame. Second is adjust the date range. Oh, sorry. Man, it's crazy. Okay. First is okay. Let me just say that the first thing is you can write it down. The first thing is get a trend on the daily time frame, right? Then the second thing is adjust your date range to 3 weeks. Then the third is go to the 4-hour time frame and pinpoint your structural levels, which is your nearest high and lows. Are you following me? Then the fourth is use the 50 pip to get your entry point. Then the fifth is put out your your tool, your long tool or your short tool, I mean your bullish tool or your bearish tool, depending on the type of entry you want to do. And that is it. That is just the 5 rules I do every single time. So we're done with USD. Let's look at another pair once again. Let's look at USD CHF, right? So the rule also applies. First things first is what? Go to the daily time frame, right? And the trend, where is price actually below the 150 EMA, which signifies to me that price is bullish. Price is bearish. Price wants to go lower. Are you following me? So the next thing is our date range. We adjust it to Friday the 27th, right? Yeah. The next thing is to go to the 4 hours time frame. Are you following me? Yeah. The next thing again is to pinpoint our structural range to our structural levels, which is the nearest high and the low. And to me, this is the nearest high and this is the nearest low. Are you following me? Then the third thing is, the reason why I pinpoint this is so that we are going to look at trade ideas from this point to this point. You understand? Yeah. So that is the reason why I pinpoint my levels. So the next thing is to put your invalidation line. Yeah. Are you following me? Yeah. So the next thing is we are going to add the 50-50-50 rule. So this is how it goes. Remember, everything is done on the 4 hours time frame. You don't have to go to the 1 hour or anywhere. So yeah. So we've gotten our entry points. Yeah. So the next thing on our list is to put our sell tool here. Our sell tool. We place our stop loss above the invalidation line. Let's give it like 35 pips. Then 1:2. For sponsoring this video, if you're looking for a prop firm to trade, a solid prop firm to trade with, to get access to bigger capital, THE5ERS is the best choice for you, right? This prop firm has been in the industry for more than 10 years, 10 solid years. So they have been long enough to earn your trust. Zero payout deniers, best trading conditions, best customer service, #1 in the industry. Go check them out, get an account with them, trade with them, make profits, withdraw, and scale up. You understand? So yeah, shout out to THE5ERS. Make sure you check them out. The description, the link is in the description below this video. Check them out and make good money for yourself, or make good living for yourself with them. And we've gotten our sell trade on USD CHF. So as you can see, everything always comes into play, right? Everything comes into play. You have to know what you are looking for, and if it's not there, you leave the pair and you go to the next one. So I believe you've known how I trade, how I place my trade ideas. You can go back, back test, backtest only on the 4 hours time frame, because that is where the edge is, right? Backtest only on the 4 hours time frame. Go there, backtest, see if it's for you, right? Because most of the time 4 hours time frame is mostly about patience, but the candle sprint very, very hard. You understand? So go there, backtest, see if it's for you, see if you can take anything away from this and maybe apply to your existing strategy or edge and see if it improves it over time. So that's just a thing. And at the same time, not all trades are 100%. We are all dealing with probabilities, yeah? So you don't expect every trade to work out as planned. All you just have to do is follow your simple rules every single time, and the result will take care of itself. You understand? You don't have to worry about the outcome. You just have to follow the process every single time. The process. Anytime you come on the chart, the same process, you follow it. You do it repeatedly, and it becomes part of your memory. It becomes part of you. You understand? You see it every time. You take action on it. You manage your risks, and you see how it works for you. So, thank you for joining me once again. I believe this will be the end of this section. I hope to see you guys some other time. Yeah, and share some new ideas and stuff with you all. So, thank you. Have a great weekend. Have a great trading week ahead, and do take care of yourself. Yeah, bye.